There are rumors that just at the time of this Trump-Elon interview tonight, in about an hour and a half from now, there is going to be an attack from Iran on Israel. OSINT Defender on X says, according to Axios, both U.S. and Israeli officials state that they have observed a significant increase in preparations by Iranian missile and drone units in the west of the country over the last 24 hours, with the preparations seen similar to what was observed right before Iran's large-scale attack in April against Israel. Now, it was reported today that within 24 hours, there is going to be this attack from Iran on Israel. We've heard this for now a week, and yes, this can cause short-term fear in markets. But in the grand scope of things, the markets are not going to care after the dust settles, after there's likely no retaliation from Israel. That's the more optimistic view if you have that. The markets are going to say this was a nothing burger. But again, it would not surprise me for the markets to be short-term fearful of any conflict and escalation in the Middle East. It's also being reported that the European Commissioner is threatening Elon Musk about his Donald Trump interview tonight. I think the impending interview between Elon Musk and Trump coming out tonight did have a more negative impact on Tesla stock today than what we would have otherwise seen, because big tech was really the outperformer today and Tesla was the underperformer. As I stated in the last video, I would not be surprised at all if you've seen a little bit of a sell the rumor today and you see a buy the news tomorrow once this interview does come out, and likely not as bad as feared. Maybe Trump has positive things to say about Elon Musk or Tesla and favorable potential policy actions towards Tesla. Another big question I have is, what is the tariff landscape going to look like for EVs specifically? If we get that question answered, perhaps that could mean maybe sooner than expected construction of Giga Mexico, because that's what Elon said in the last earnings call. He said there's no point in trying to build a factory in Mexico within 3 months before the election and get that process started if the tariffs are going to be insane and there's going to be restrictions on imports from Mexico. There's no point in doing that. Perhaps even on that front, things could get interesting. What about full self-driving? What about that? What about Trump's stance towards full self-driving and autonomous vehicles? We really haven't heard anything about that. He hasn't been asked about that. That's not something the general public asks him about, because the general public doesn't understand the progress behind FSD that we are seeing. So if we get any good signs on that front, that would be massively encouraging for Tesla. I think there's a lot more of a potential upside surprise coming from this interview than a downside surprise. Now, keep in mind, Trump is just half of the potential outcome. Let's call it 50% odds of winning the election. It's not the end all be all, right? There still is a chance the other side wins too, in all fairness. But I think the markets would look at that favorably for Tesla if Trump has good things to say about Tesla. Really specifically about Tesla's technology. So I'm actually expecting tomorrow could be a pretty good day for Tesla stock. Coming out tomorrow morning, we will get PPI month over month. We are expecting that will come in at 0.1%. Last month, we were at 0.2% month over month. So we are expecting about 50% better numbers this month than we had last month. So as long as we come in line with estimates, maybe even 0.2% like last month, I don't think this is much of a catalyst. The problem would be if, let's say, PPI comes in at 0.3% and it's actually accelerating here, then I think Wall Street would take notice and say, yeah, it's starting to look pretty stagflationary. Maybe inflationary pressures come back a little bit and growth slows down. Although that's not my forecast. I think PPI could actually be negative. And if it's negative, that would also be bad news, right? Well, I guess not PPI per se necessarily. Being negative would be bad because that's the producer side of things. So producer costs going down or even, negative would maybe be a good thing. But that would also mean that CPI is probably going to come in light. And if companies cannot pass on any cost to consumers, if consumers really do revolt and they will not pay the higher prices, then deflation is actually worse than inflation. Imagine if you bought a TV for simple math's sake, let's say $200, but let's say there's 5% deflation in the TV market. And let's say that TV is now selling for $190. That's less money that company takes in. That's likely less employees that company will be able to employ. And then those people get fired. And then it's just a snowball effect from there. So deflation is worse than inflation. So we don't want to see deflation, but we also don't want to see accelerating inflation either. So it's a fine balance here between too much disinflation or deflation and too much inflation. We also will get a speech from Fed Bostic coming out at 1:15 p.m. tomorrow. And I think the Fed officials are pretty much all in agreement that September is going to be when we get the first Fed cut. The real question is 50 basis points or 25 basis points. I think from the market's perspective, 50 basis points should happen, but may not be good if it does happen. What I mean by that is if the Fed is now forced to start cutting rates more aggressive, then that's going to send a really bad signal to the markets. The Fed would have to really hammer home that they're just trying to right-size Fed policy, not the economy is weakening or they're concerned about the economy. That would be a fine needle to kind of thread. Whereas 25 basis points, they could just say, hey, we're normalizing, like there's no rush, things are great, things are fine. If they're doing 50 basis point cuts or even more than that at any point down the line, markets may not buy the whole we have time, the economy's doing fine. Hopefully that makes some sense. And really, when it comes down to it, the only thing that matters is economic activity right now. I don't think the Fed matters. I don't think inflation matters. I think the economic activity is going to dictate what the Fed does. So really, in simple terms, if the economy starts weakening and retail sales this week comes in bad, markets are going to price in a more aggressive Fed. Right now, there's a 52% chance of a 50 basis point cut. Earlier in the day today, you were only pricing in like a 40% chance of a 50 basis point cut. So markets are going back and forth between 25 basis points and 50 basis points. But between now and September 18th, there's a lot of data we're going to get. If the data starts to show the economy is really weakening, the consumer is really pulling back, one, I think markets are going to sell off a lot more from here. But number two, markets might start to price in a 75 basis point cut. And even going from, let's say theoretically, 25 basis points today of an expected cut, or 50 basis points technically, it's like 50-50 if we want to be honest, to 75 basis points, even though that's more cuts from the Fed, that's going to be coupled with lower stock prices, because the reason why the Fed is cutting rates, is far more important than whether the Fed does a 25 basis point cut or a 1% interest rate cut coming September. The bigger the cut, the more pain in markets. That's the easiest way to look at it. But with that said, I do think Thursday's retail sales is really going to be the big catalyst of this week. Last month we came in at 0%. We're expecting 0.3%, so actual growth on a month-over-month basis. Let's say this number comes in negative. Yeah, we're going to have a bigger problem on our hands than what we have now. Let's say this number comes in 0.5% to 1% positive. Markets are going to rally something vicious as fears of the consumer really slowing down start to slow down. Now, coming out Wednesday, we will get CPI. And again, as long as we do not come in higher than expected, we're just fine. Wall Street's expecting about 0.16% month over month, so 0.16%. That gets rounded up to 0.2%. But that would be in line with what you had 2 CPI reports ago. So it would really be super low inflation. That is, what? Is that 2%? I don't, my brain doesn't want to math right now. That would be 1.9% year over year annualized core CPI if we come in at 0.6%. So definitely looks like we're at 2%. and inflation is really no longer the problem. And that's why I don't think CPI is going to be a huge catalyst unless we were to come in at, let's say, 0.25% or something along those lines, times that by 12, you're looking at 3% inflation. So from 0.16 to 0.25 doesn't sound like a big deal, but that is the whole deal. So as long as we don't come in too high or higher than expected in any kind of material way, then I would expect CPI is really not a big deal for markets at this point. It's all going to come down to the economy. With that said, the strength of the consumer, the strength of the economy is also going to be what affects Tesla the most. And I expect Tesla's going to be affected a lot more than even the broader markets, because the broader markets are really controlled by your Super 6 stocks, your Googles, your Apples, your Amazons, your Microsofts, Nvidia, so on and so forth. Consumer weakness, a recession, potentially recession fears growing, is not going to be good for those stocks. It's not going to be good for any stocks. But really, Tesla is a very consumer cyclical company, right? If the economy does well, if the consumer does well, Tesla does well. If the consumer does not do well, the economy does not do well, Tesla does not do well. And that's just crazy to think, you know, people are cutting back on $5 coffees, but Tesla's still putting up some rock solid numbers. So I think Tesla's brand position is in a great place. I think this period of weakness we have seen in the economy and the consumer really for like 2 years now just highlights how strong Tesla really is. People are not doing great well off, but they're still opting to buy that Tesla. Yeah, sure, Tesla's had to cut prices. They've had to buy down the interest rate because of where rates are. But I mean, just imagine when things do get better for the consumer, better out in the economy, Tesla is going to soar. I mean, Tesla's business itself is going to soar, and that's going to help Tesla stock to soar, right? Because the stock is reflective of what the actual business does. Now, I think profitability will also boom during that time as well. But if we start to get worse economic data, worse data on the consumer, I expect that will in the short term affect Tesla more, for better or for worse, than the broader markets. And I do also think this is very important specifically right now for Tesla stock and Tesla stock investors, because we have a major event coming October 10th. If the markets do get some favorable data here with Tesla's upcoming catalyst October 10th, there can be a lot of excitement in the very near term, maybe the next couple of weeks, for Tesla stock. It's like, what better way is there to play consumer strength, lower rates, and a potential major catalyst in 2 months, like Tesla, right? Just with the latter two, there's really no better way to play lower rates and a stronger consumer than Tesla. That's the bottom line. Some companies benefit from a stronger consumer, Dollar General, and Starbucks. I mean, any company that is really consumer related will benefit from a stronger consumer or economic data that looks better, right? Their stocks will benefit from that. But there's not too many companies that are consumer cyclical in nature that are also interest rate sensitive in nature, because a lot of interest rate sensitive companies, they're small caps, right? They're indebted companies, really lenders, banks, quote unquote boring companies are the ones that are consumer cyclical and interest rate sensitive. And I think from an investor perspective, I would much rather own Tesla than a bank right now. Commercial real estate, I mean, that's a problem that's going to be around for a long time. So I really think Tesla stands to benefit the most, or potentially lose the most, from at least the consumer aspect of Tesla. Again, consumer aspect and interest rate, sensitivity aspect. Now, if rates start to get cut more, then Tesla's obviously going to benefit from that, but the consumer weakness will outweigh that. So really, long story short, Tesla in the short term is a high risk, high reward trade for the data that we get this week. Now, longer term, Tesla's going to do just fine, and Tesla is a clear winner. I mean, is probably the company in land of big tech that has the most opportunity. Tesla has more opportunity ahead of it than Nvidia. And I know that's crazy to say, but Nvidia is a $3 trillion market cap. Tesla's about 800 billion, 750 billion or so. With the kind of future that Tesla has, I don't think that's priced into Tesla stock nearly to the same extent that, let's say, Nvidia's forward potential is already priced into the stock. So long term, you have nothing to worry about. Short term, there's going to be a lot of volatility, for better or for worse. Now, I'm leaning towards potentially worse. I'm leaning towards maybe a worse than expected retail sales. But again, I tend to be early to things, and it wouldn't surprise me if we don't get those worse retail sales numbers until November, December, the start of 2025. And I think in regards to markets right now, Wells Fargo's Chris Harvey puts this quite well. He says, be concerned, but don't be fearful on equities. So take a listen to this.
Head of Equity Strategy, Chris Harvey, joins us now. What specific advice are you giving your clients as we begin the week?
What specific advice is be concerned, but don't be fearful, right? There's opportunity to open up. We could have some reverberations from what happened last week. Typically, when you enter a Fed easing cycle, it is more of a risk off, but there is opportunity there. So where it is, take it. And we're seeing good opportunity in the communication space. You did see a correction. You have good valuations, good fundamentals, you have positive momentum, and I think you can make money between here and year end in those space and in a lot of those names.
Why communication in particular? Because there were a lot of sectors beat up.
Yeah, it's a sector we've been riding for probably a year and a half, 2 years, sector we really liked. If you look at the underlying fundamentals, those fundamentals have continued to improve, but more importantly, it has good valuation, right? You're not paying through the nose for a lot of the valuations, and that's something we really like. More of a good, what you would call risk reward.
What about momentum? I know you've written about that as well, sort of bent but didn't break.
Yep.
I mean, how important does that continue to be in terms of this marketplace?
I think it's really important. One of the things we talk about is this feels like 1998, right? And similar situation where you had positive momentum, you had big caps outperforming small caps, Fed started to cut rates, and you did have a period of turmoil, but after that you did see growth, you did see momentum really get on its horse and start to move. So we do think it's very important. We do think that it's not time to go to that contrarian basket, to go to small caps, to be, very aggressive on that high risk trade. I think it's really about positive momentum, good risk reward, and things that are working.
So you weren't a believer in that rotation that we were talking about a few weeks back that obviously did whipsaw people who own the mega caps?
No, I think what we saw there was it was an exceptionally oversold type situation, just working itself out. If we look at the underlying fundamentals, they're just not strong enough at this point in time. I think a lot of people just don't trust the E. Yes, there's a big discount for small caps, but what is that E? And we're still seeing that E go down. And until we do, it's a very levered type situation. And unless you want to put on a lot of risk, it's not the place to be.
What about positioning? I've read some bullish notes this morning saying a lot of work was done on repositioning heading into September. That might be helpful.
I think that's right. I think this is now a much more balanced market. I think it's a much healthier market. One of the things that was common with 1998 is you did have a ton of leverage, and you worked out a lot of those over-levered type situation. Right, and you did see what we're saying is one of the reasons why you want to go back to communication, one of the reasons why you want to go back to momentum, it is on sale, right? Before it was very stretched, or a lot of these names are very stretched. Now it's on sale and you can get them at much better valuations.
Yeah, I mean, I've been watching the VIX late. We only watch the VIX when it skyrockets. It went to 67 in early August. We're now below 20.
Yeah,
what does that tell you?
We look at the VIX, and I'm not really sure what happened on Monday, but the more important issue is liquidity, is credit getting to where it needs to go? And credit markets are functioning normally, right? IG credit or investment grade credit, there was more paper issued than expected last week. That's a very, very healthy sign. That's not something you saw back in 1998. And if we see the credit markets start to retract or start to dry up, then it's a problem. But right now, still pretty healthy.
And I'm still going to stick with my call on Tesla for potentially as high as 215 this week. On the low side, that 100-day moving average is the level to watch for. On the downside, about $191 per share. But it does look like Tesla is coiling, getting a lot of demand in this level. You can see the low wicks of the last 3 days have been bought up, especially today. That's a pretty good sign when you close near the high of the day 3 days in a row. Generally, when you're trading sideways, tends to lead to higher prices. I think the 203 level could even be in play as early as tomorrow, as long as that interview with Trump and Elon goes according to my plans, which is more good news than bad news, and specifically, what does Trump say about FSD and autonomous vehicles? Someone is very angry today unless he's sitting right on daddy's lap. Ain't that right, dude? What's going on with you? Or knocking all my lights over and books over. Nonetheless, that's gonna do it. We're gonna get ready to watch the Trump Elon interview. Ain't that right? We gotta start him young, man. We gotta start him young. But yeah, that's gonna do it for this video. Hopefully you guys learned something, got some good perspective out of this video. I do my best to provide as much perspective as possible for free 99. So hit the like button and subscribe to the channel if you made it to the end of the video. If you guys do want to come trade with us live in real time, say come trade with me live in real time every single day, Monday through Friday, 7 hours a day. You guys can check out that link down below in the description of this video. Nonetheless, enjoy your day, and I will see you in the next one. Ain't that right? We'll see you in the next one. We'll see you in the next one. We'll see you in the next one.